Does the Fed cutting its rates have any effect on millennials, Gen Zers, people who don't have money and currently can't buy a house? We're going to get into that today. Hey guys, welcome to Ink Money. I'm Charlie, and I have Brian beside me. He is a little shy, so his face is not going to be shown in the video today, but he is going to give us some feedback in the background, and it's going to be a lot of fun. Remember, this is not any financial advice. This is just our opinion, and we're going to have a lot of fun as we discuss how money works and whether the Fed rates being cut actually affect us and do us any good. All right, so this is a video from wishtv.com. It's I think a local station that's talking about whether the Fed rates being cut actually affects home buyers. Because currently, Brian, so the Fed rate was cut how much? It was cut by
about 50 basis points or 0.5%.
Okay, so what was it what was it before that?
It was around 5%.
5%. Okay. So basically it's at 4.5% now.
Yeah, give or take a few percent. Yep.
Awesome. All right. Well, we'll get into this video and we'll talk more about it.
If you own a home or you already have a mortgage but you'd like a lower rate, the coming days and weeks could be interesting. Federal Reserve has, as we've reported, decided to cut its benchmark interest rate, likely leading to changes across all forms of borrowing and lending. Molly Grace is the mortgage reporter within Business Insider, kind enough to join us early on a Monday morning to look at what's in store if you're interested in buying a home or a refinance. Thanks for being with us. We really appreciate it.
Yeah, thank you so much for having me.
Well, you've written several articles on this that really serve as, I think, a good primer for our viewers. So let's get started with the role that the Fed has in mortgage rates. It's not a simple action-reaction, correct?
Right. So a lot of people think, okay, the Fed lowered rates now. Maybe now is a good time to get a mortgage. But mortgage rates have actually been falling for several months now, and they dropped substantially in the weeks ahead of the Fed cut, kind of in anticipation of that cut.
So they've been falling for several months now. They've been cutting it slowly then? Is that right?
Yeah, so it's actually a really interesting fact you brought up here. So what's happened is the Fed itself has the discrete cut that they've priced in. So they're doing this half basis point cut.
Mm-hmm.
But the banks are all free businesses. And so in anticipation of cheaper money, they've been able to loan their money out a little cheaper. And so that's why we've seen this gradual reduction in the rates over the last few months in anticipation of the Fed rate cut. Because the Fed is basically just loaning to the banks. And then the banks can choose how much profit they want to make when they loan to one of us as the consumer.
And let me get this straight. The Federal Reserve loans the money to every single bank in America, right?
Yep.
That's how that works. Okay. So whether you're a small bank, a big bank, it doesn't matter. You're getting a piece of the pie.
Exactly. Yeah. The Fed basically is just this huge money supply, and if you need to write a loan, you give the Fed 5% or 4.5% per year, and you get to use that money for your clients.
That's so nice. How do I become a banker? That is the question.
Well, you know the right people and maybe pay off some of them and join the banking industry.
Sounds about right. I wonder what the requirements are to become one of those. Basically the banks will make about 2% usually on what they loan out to us, right? They get the 4.5% from the Federal Reserve rates, and then they get to loan out at 6.5% to everyday consumers for mortgages, for personal loans, for business loans.
That's about right. Yeah.
Okay.
That's true for mortgages, for like a car loan or something else that they have, some other financial service the bank will provide. Sometimes they'll get a bigger spread on that because it's perceived as higher risk.
Okay, that makes sense. All right, well, let's get in more of the video.
Mortgage rates actually, just on a day-to-day basis, inched up a little bit, but they're still very, very low compared to where they have been.
So that then starts the conversation. And you take the questions on in a few of your articles. One of them is now the time to buy. Another one, time to refinance. Let's look at buying first. What are the factors to consider? Because this is much more than just about rates.
Yeah, so I always like to say, and a lot of experts like to say, you want to buy if it's a good time for you. You don't necessarily want to be trying to time the market or waiting for the lowest rates possible. If you need to buy a home, you should buy a home and just find, kind of what fits your budget. But something to think about is right now, mortgage rates are really low. They're about the lowest they've been since early 2023. And it's not quite clear how much lower they'll go. So it could potentially be a good time to buy right now, especially as kind of the season ramps up. It's getting a little slower. The competition isn't as bad. So you might have an easier time getting a home now than maybe you would perhaps next year if mortgage rates are a little lower and competition is a little hotter.
So it sounds like right now it doesn't matter really to buy a house. You could either buy it now if you feel like if you feel like you can afford it, or you could still wait.
Yeah, well, I think it's important to remember she is a mortgage professional, and so she is here to sell a product.
Okay.
And I think in the greater scheme of things, what we're likely to see is continued Fed rate cuts. So we're likely to see reduction in the cost of borrowing. And I think that will continue for the next year and a half or so is what the Fed is priced in. And so, yes, now is a fine time to buy if you have the money and you have a house you like, but I think it will continue to improve over the next year, year and a half.
Oh, okay. That's good. That's good news. But right now, the cost of housing for people for our generation, for millennials, Gen Zers, the cost of housing is much higher than what our parents had to pay, right?
Exactly. Yeah, you've actually hit the nail on the head with that because, sure, the price of the actual money that we're borrowing is fairly cheap in the greater scheme of things. It's only 6% or so that we're paying on these loans. But the loans themselves have grown massively since our parents' generation. And
because of how much housing actually costs.
Exactly. Yeah. Housing is beating our paycheck increases by several percent, which is why housing has been kind of this inflation hedge for housing investors. And what that's now causing is for us to buy homes, we have to offset that entire profit margin that the previous generation had, which means it's much less affordable for us.
That's not good. That is not good. And that's why I'm frustrated because can't afford a house right now. So basically the only way to get around this is we need to make a lot more money or be willing to take out more loans in the process in order to buy a house. Would you even say buying a house is a good investment at this time for us? Because it seems like after, the baby boomer generations passes on, won't that make it so because the population replacement rate is lower than what it should be? Mm-hmm. Won't that make it so housing will actually become deflationary?
Yeah, that's actually a good point. So on the one hand, yeah, I think it's maybe not a great investment like it was. Back in our parents' generation, you could buy a home and that was kind of your retirement, right?
Okay.
And now it's basically if you own your own home, there still is that stability of having your own place. There's no landlord and so on to come in and say you can't do certain things or whatever. And so there's still definitely advantage to owning the home. Mm-hmm. It just may not be monetary anymore.
Okay, that makes sense. It might be good to just maybe buy businesses instead.
Exactly, yeah. Investing in the American economy, I think still has definite room to grow.
And I know, have you heard of Cody Sanchez?
I have not.
Okay, well, she just proposes buying businesses because there's going to be a lot of baby boomers that are going to be retiring here soon. And it might be a good thing to buy their businesses and revamp them with technology and actually make them more productive. And then you make more money if you're a business owner of those businesses. I think that's a good idea. Maybe instead of just focusing on trying to build your wealth buying real estate you should invest, I think, also in 401ks, Roth IRAs, or using those vehicles to invest.
Absolutely. And those are kind of a form of investing in the American business as well. They do tend to bias towards the larger businesses. Most of them are based around the S&P 500 or something similar like that. But there's a whole area of business that you're talking about with the small business, especially with our generation. We can bring to bear AI and some of those other things into that field as well and kind of make those businesses more efficient and add value. And so I think that is a really cool opportunity we have. Maybe it isn't as easy for us because we can't just go buy a house and have a retirement right there. But I think if you're creative and work hard, there's amazing potential for us.
Yeah. It will require a lot of work. And again, this is not financial advice. So you do as you choose with your financial advisor who's a professional who can help you out. We're just two guys who have an opinion. Anyways, we're going to finish this video and then we should be good.
A stagger between where rates are and where demand is. So if the overall price is higher, but the rate's not significantly lower, as you say, it may really depend on the math that really works for you. Let's talk refi now. There are fewer factors to consider. I mean, you have the home. You're not in the competition anymore.
Yeah, absolutely. So, yeah, that's the kind of the thing to think about is, are mortgage rates lower now than they were? What rate am I currently paying? And could I save money by refinancing right now? Some people might think, maybe I'll wait to see if rates go a little bit lower. So you're not necessarily having to maybe refinance multiple times if rates do go a lot lower. But if you got a mortgage more recently, it could be worth it to refinance. You could save quite a bit on your monthly payment and kind of give you a little your budget a little more wiggle room every month.
I've always interested to hear historic perspective as well. Not too very long ago, not too many decades ago, this discussion of whether 1 point between 5 and 6 is significant enough. We're still at fairly low historic rates, correct?
Yes. You go back long enough, you could see mortgage rates in the double digits. They got quite high. So historically, of course, now we're used to this, and we're used to, during the pandemic, mortgage rates dropped below 3% even. So a lot of people still are kind of waiting, holding their breath to see if rates will go lower again, but they probably won't go quite that low. But yes, historically speaking, mortgage rates are relatively low.
So, I mean, mortgage rates, I think you mentioned this earlier, mortgage rates in the 1970s, 1980s were way over 10%, way over 12% even. So, but the cost of the house was only double that of the income of our parents' generation, whereas it's 7 times what the median average household income is today, right?
Exactly, yeah. So basically in our parents' generation or the generation before, it was much cheaper to go buy a house in cash relative to the overall median income. And now the loan has gotten cheaper, as in you don't have to pay as much per month to own that cash because the interest rate is lower. But the overall value of the loan has gone way up.
To sum it up, Brian, basically the federal interest rate cutting by half a basis point isn't going to do anything really too much for us, is it?
Not at all. It starts them on a track of maybe greater affordability in the future, but I think the take-home message is there's still a lot to be done. We've made a tiny, tiny start in the right direction.
Awesome. All right, well, don't forget to like, follow, and subscribe if you want to learn more about money, along with myself and Brian, who's sitting next to me but doesn't want to show his face because he's a little shy. Yeah, we'd also like to hear what you have to say about the Fed rate being cut. All right, have a good one. Take care. Bye.